Isaac, the co-founder of Dentist Advisory. Ryan, would you like to share anything about yourself?
Yeah, thanks for having me. Hello, Ultradent Facebook world. This is really cool. Thanks for having us on the show. My name's Ryan. Dentist Advisors is a financial planning and investment firm for dentists that we started 15 years ago, and we're here to help dentists make good financial decisions. So that's what we're going to talk about today: is crazy times, insane times. No one really saw coming 3 weeks ago. I mean, I don't know the situation anyone would have predicted dental offices would be closed nationwide. It's really, really crazy and tough to see. Really worrisome for a lot of families and people. And so, yeah, we'll have a chat today. We got good questions, and I guess if there's people who submit questions, that we can do Q&A. Do whatever you want. I'm at your disposal to help however I can.
Awesome. And then everybody who's watching this, if you do have questions while we are talking, please feel free to drop a comment below. If you are here, don't forget to just drop an emoji and wave to us, because we just want to know if you're watching. So question number one that someone sent in is, how should I approach cash flow at this time?
Yeah. How should I approach cash flow? Well, so most dentists are in a situation now, like here's what's normally happening is every dental practice has, of course, like revenue and expenses, and you got a practice checking account. And ideally, most practices run with 1 to 2 months worth of expenses sitting in their practice checking at any given time,
Right.
The exception to that, here's where it's really hard, is where this could have caught some people off guard. Like if you were brand new in your practice, like you just started this thing up, especially a startup where it's like all expenses and no revenue, and practice checking is like 10 grand, this would be really, really tough for a lot of people. Or there's a lot of cases where, let's just say, for example, someone had 100 grand in their business checking, and they're like, oh, I'm just going to make this big tax payment right now, but we'll, another month, and we'll replenish the account. And then they shut down after giving their money to the IRS, or some people are building a building or a house, and they just had to like deplete all of their resources. And it's like, it's a really scary situation to be in. So dentists right now have like two first priorities. Number one is, how do I keep the business just paying bills during this time? That's priority number one. And priority number two is, how do I keep paying my personal expenses at home? And then number three would be like, what do we do if you're a dentist with excess on top of those two things? And people are asking, like, what do I do with money right now? Is it a good time to invest money, to buy stuff, hold on to it? So priority with cash flow, though, is that's number one. And number two is just protect the business and then protect your personal cash flow. But there's a lot of nuance in there. There's like a ton of different scenarios that everyone find themselves in. So, but that's it. Those are for sure the first two priorities. And that's what everyone's like worried about right now. Where am I going to get cash to do these things?
Right. I've definitely seen a lot going on in like the dental Facebook groups right now. Another question that we actually had sent in was, I know marketing timing makes no sense, but is now a good time to get out and then go back in a set time?
Yeah. So this is kind of like, it's kind of part of the cash flow question. So if you're a dentist running a business and you have, like we were just saying, you've got capital to keep the business afloat, you got enough money to keep spending at home. Hopefully there's an emergency fund,
Right.
like a business will hold 1 to 2 months of expenses. Personally, you'd always want to have 3 to 6 months of your family's spending somewhere that you can access and spend, that's not like sitting in an investment that you have to sell. The third question people are wondering, though, when they have investments at this time, if they're invested in public stock markets,
Right.
is they're wondering, like, do you, it's a very common question. Do you get out of an investment when it looks bad and then wait for it to get good and then get back in? And that's very rational. It's a very logical question to ask. It's like the most basic desire of every investor since the beginning of time, right? Like, how do I avoid the pain but get all the reward?
Exactly. Do I go later? When is the time?
It's the same question with like dieting and fitness and exercise. Like, how can I like do this easily, right? I want to be like healthy and fit, but I don't really want to track my calories or my macros very closely, and I don't want to exercise too hard. How do I do that?
Is there a magic pill for us?
Well, that's why the health industry produces magic pills, and the financial industry produces garbage content that tells people lies, to be honest with you. It is, I won't call it impossible, because in hindsight, someone out there, someone out there will be like, I saw this coming and I got out at this point and then I got back in at this point. Someone will. One
Right.
person, a few people out of millions, maybe. But it's extremely improbable in a public stock market to know exactly when things are going to start going down, like really start going down, because there's a lot of false signs. Markets go up and they come down, they go up. It's really improbable to know when to get out. And the harder part is, like, I feel like everyone, if you asked a lot of investors 2 weeks ago, 3 weeks ago, hey, do you think stock markets will go down with this coronavirus stuff? I think a lot of people would have said, yeah, I think so. That would have been a fairly rational response. The problem is stock markets historically will start improving probably fairly quickly during a time when the news is still bad. So the problem is people get out of their investments and then they wait for some kind of signal from the media that it's okay. And the problem is, if you look back at 2008, we had this historic almost 50% crash in the stock market. The world, imploded. And the very bottom was March of 2009. But the news in March of 2009 was not good news. We still had giant question marks about banking and solvency and all this new debt our government was taking on. Who's going to pay for it? And so the news is bad when the market starts getting good, and that's what makes it so hard to know when to get back in, and that's where people get burned. So they pull their money out because they think they can feel their way through this, but then they don't know when to get back in. And there's stories after stories of people in 2008 who pulled money out that didn't need it. It's a different story if you need the money, right? If you need the cash to survive, talk to a financial advisor, talk to someone who has your best interest in mind, get it, just bounce this off somebody before you make a big decision. But if you need cash to keep a business or family surviving, that's a different story. But if this is 20-year money you don't need, there's so many stories in 2008 where people pulled their money out and never got back in, or they were years late. And this whole decline in the market that we just saw happened in a matter of 2.5 weeks. Yeah. And so don't be shocked if it fixes itself in the same time frame when it does, Crazy time. So my definitive opinion, if you don't need the money, there's not a rational reason to pull it out and expect that you can get back in at the perfect time. No one does that well. And we've already taken such a hit that if your money's already been exposed to the markets and has gone down this much, you've already taken a pretty big hit. So, make sure you talk to a competent fiduciary professional that can make sure your portfolio is well built. If you have a crappy portfolio, then maybe that's another issue too. So talk to someone. In our field, there's a thing called a fiduciary. That's a financial professional who doesn't sell things for commissions, who has your best interest in mind. That's what our firm is fiduciary. Talk to a fiduciary. Make sure you have a good portfolio. And if it's 20-year money, then let it be 20-year money. You can't get skinny without some hard work. It's the same concept. It's the same thing.
It is, but the times are tough. So hard. How do you even know which stocks are the best to invest in? Should you invest in stocks if you have that opportunity right now? Is it a good time?
Yeah, look, this gets thrown around as a funny anecdote, but it's really true. The stocks have to be the only thing that when they get cheap, people don't want to buy them. And when they get really expensive, everyone wants to be a part of it. Nothing else in the world operates like that. Disneyland tickets don't. Costco doesn't. Nordstrom doesn't. Amazon doesn't. Real estate and real estate doesn't. Dental practices don't. Everything else in the world, when it gets cheap for whatever reason, people want to buy more of it and quickly. The stock market, though, when it gets cheap, people are like, I don't want this. I'll wait till it's expensive again and then I'll buy it again. Just because there's just some weird dynamic that makes it feel better. So globally, stocks are down anywhere from 20 to some of them 45%. Wow. And so, again, talk to a professional fiduciary person who has your best interest in mind. We always recommend building a portfolio of low cost, globally diversified, meaning you own thousands and thousands of stocks instead of trying to pick which 10 in the world are the best ones. Right. And it's a great time. It's a great time if you don't need the money to invest in things that are cheap. And it's if you are a real estate investor and in 2009, 2010, after everything got slammed, like you were excited to buy houses. This is the same thing. You know, you should be excited to buy things if you don't need the money. But needing the money for business and personal expense, I mean, this is a really crazy time, and there's still a lot of uncertainty. So you got to protect your business and your family's spending first and foremost.
Right. Do you, with your professional opinion, do you think that the market can go to zero?
That's a common question. So people, when markets go down, and we keep saying markets, I'm just referring to the stock market. And people usually say the stock market. Usually they're just thinking of like the Dow Jones or S&P 500. Those are United States. They're called indexes. There's just groups of stocks. But a lot of people, when they see this stuff happen, their worry, and it's totally rational, their worry is that the thing can just disappear, right? So the worldwide stock market is made of, it's like 14,000 publicly traded companies all over the world, right? And if you owned just one of them, the chance of one of those companies, like if you randomly picked one out of the 14,000 and said, I'm going to invest in that stock, the chances of that, maybe you pick Blockbuster, and we're still in the time of like Friday nights of wandering the aisles looking for tape. I don't know. You might not have been. This is my era. Okay. This is my era of a good Friday night is you take your friends or your loved ones and you go to Blockbuster and you wander the aisles. I even remember the times when my dad would go and rent the VCR and then we'd rent a tape at Blockbuster. But maybe you're
VCR. What's that?
Yeah, that's another podcast. But maybe you decided to buy one stock and you picked Blockbuster. Well, if you bought one company, yes, one company can go out of business. If you pick two, your chances are a little higher that all of it won't go out of business. If you own a portfolio with 14,000 companies, that means your chances of your portfolio going to zero, being worth nothing, are very low. And the scenario where the entire stock market goes to nothing, zero, is the scenario where every company, publicly traded company in the world, no longer has a value in the stock market. That means the Honda people are driving and shopping at Costco and texting on your iPhone and filling up at the gas station and all the things that we enjoy that are publicly traded companies giving us our products and services. That means they're worth nothing in the open market. And that could the world's over when that happens, by the way. I mean, your biggest worry is not your portfolio when that happens. Your biggest worry is like, can you farm products in your yard and barter them for toilet paper with your next door neighbor who hopefully can manufacture it? Yeah. So could that happen? Yes. The world is devoid of publicly traded companies. World's done if that's the scenario. So it's not likely, and that should not be a worry of someone who has a diversified portfolio. Your portfolio won't disappear. Now, if you owned only a handful of stocks, like you just kind of were trying to pick some winners, it's possible. There can be companies that go out of business over things like this. And shout out to Blockbuster. You know, it happens. Companies go out of business. So yeah, that's why you build a portfolio of low cost index funds that give you access to thousands and thousands and thousands of companies all over the world, because you're spreading your risk out. That's what happens. So
it's amazing. Also, I see we have a lot of people that are watching this. So just a reminder, if you have any question, please drop them in the chat. We'll be able to answer them on the spot. So
yeah, we'll answer questions. We'll do some Q&A.
Write us just let us see that you're here. Send us an emoji.
Or a GIF.
Or gifts. I love gifts.
Explain how you're feeling right now with a GIF. No words, just one GIF to explain how you're feeling.
Is it a GIF or a GIF?
I think it's GIF.
Let's not start that battle.
Classic argument. I'm going with GIF though. Hard G. GIF.
I am a GIF as well. Okay. So another question we had was, since interest rates are near zero now, does it make sense to have bond funds in my portfolio?
Yeah, so we could turn this into like a 10-hour discussion. We'll be careful. So to keep this like really high level, there's like two different things you can put in a you can put a lot of things in a portfolio, but we'll just use two really common things. You have stocks, which is when you give money to a publicly traded corporation, and in turn they give you a little tiny chunk of their company, right? And as now as like a little owner of this little company, I participate in all the growth and all the downtimes too. But because of that risk, because I'm a little owner in a company, and companies can go down in value or disappear completely. My risk is higher, but also my reward is going to be a little bit higher. That's what a stock is. It's all a stock is. A bond is just a loan, and we actually see this all the time. People don't realize, when you go when it's like voting season, or in your cities and municipalities, your towns, there will be like the public's voting on a bond to. Oh, well, you're in Utah. I'm a Utahn, so or was. I'm a Phoenician in the desert now. So I think that's the word, Phoenician. I don't know. But do you remember there was a Hogle Zoo bond to raise a bunch of money? It's like a couple $100 million to build some new stuff at the Hogle Zoo. It was a public bond. Basically, and this happens for zoos, schools, hospitals, roads, bridges, golf courses, water treatment facilities. Cities and companies will go instead of raising money like as a stock, they'll go borrow money. And they'll just say, give us money for 5 years. It's a loan. A car loan's a bond. A house loan's a bond. You're just borrowing or lending money for a fixed period of time for a fixed interest rate. Over that period of time, you get the interest payment or you pay it. And then you get your money back at the end, right? That's all a bond is. It's just a loan. You get your money paid back slowly with an interest rate. And if you give your money to someone who's likely to pay you back, it means it's a pretty safe bond, which means your risk is lower. And if your risk is lower, your return's lower too. That's just universal risk and return, right? So you have stocks and bonds. So when people build portfolios that are aggressive, they have more stocks than bonds. When they want them conservative, they add more bonds. So the argument is, should I have bonds in a portfolio because they're affected by interest rates? And interest rates right now, it's insane in 2020 where interest rates are. No one ever thought this was going to happen. So they're affected by interest rates, and people are like, well, should I hold them? Should I not? And the answer is like, at a high level, to get in the weeds, you'd have to just call an advisor, okay? But at a high level, bonds will be kind of like the padding when your stocks are going crazy. So if stocks fall a lot, typically over time, bonds will kind of like do the opposite. They'll be like the stoppage there, the padding, from the wild ride that stocks will take you on. So when you build a portfolio, that's what you do. You want it more conservative. You add more bonds or cash to it. And the discussion of like what types of bonds to have it with an advisor, because there's a lot of different types of bonds. There's crappy bonds out there that you shouldn't own. But as a general rule, I'd still have them in a portfolio. But again, talk to an advisor. You can chat with our company. We have advisors you can schedule on their calendar, and we're really nice. We're not mean, and we're not judgy, and we'll answer questions with a smile. And you just go to dentistadvisors.com and click on the schedule with an advisor button, and there you go. You can have a chat with us about it.
That sounds super easy.
Yeah, that part's easier than the whole explanation. Scrap everything I said and just go to dentistadvisors.com, click on the schedule a consultation button, and talk to an advisor. And that's easier than what I just said. So
just wipe all that, start fresh, do this.
Just do that. So look, our company puts out a ton of content. This thing on my shirt here, the Dentist Money Show, that's our podcast. It's been around for a few years. We put out free content, these types of questions every single Wednesday. And on our website, we have an education library. So you go to dentistadvisors.com, click on the education library, and it's like dozens and dozens of hours of free content of every possible financial topic you can think of. And there's videos, there's articles, there's blog posts, and podcast episodes. And it's all free. And we add to it every week. Multiple hours of content every week. So tons of your questions could get asked. You don't even have to talk to a human. You could just go to the website and go listen to a podcast. You don't even have to talk to a human, which is even easier in isolation.
That is a little bit easier.
Yeah.
Sometimes it can be a little bit harder.
It's intimidating.
I'm saying this to you.
It's intimidating. Look, that's a totally true thing. It's intimidating to call a financial advisor because people don't want to get sold stuff, and they don't want to be pitched, and they just want some genuine, transparent answers on things. And I can promise that would be your experience in talking to us. But if you don't want to, that's cool too. That's why we put so much content on our website, and just do that. Just go check out the education library and download tons of content.
That's perfect. That's cool. Okay, I have two more questions.
Two more. Okay.
Then I don't think we have. We might have some comments that we need to go over.
I'm not reading them. I'm not even that savvy. So you just read them, and I'll say words. And hopefully they're good.
So this next one is, should I be looking at obtaining business lines of credit or short-term loans with the possibility of needing to shut down for 2 weeks plus. We don't even know.
I don't know.
Say estimated 2 weeks, but like we said, it changes day by day or minute by minute right now.
Yeah, we don't know. Man, I mean, just first, like, total sympathies out to everyone. This is like really crazy times, unprecedented. Really hard to plan for this stuff, especially if it just catches you off guard during a time when you're, doing a big project, moving, putting up a building, just starting a practice. So just have a lot of feelings and sympathies for everyone going through this, all the business owners. To your question, I think it's smart to get liquidity and cash on hand any way you can. I mean, if you can get a line of credit that'll stay open and give you some kind of cushion, I mean, loans are cheap, interest rates are low, and I would totally do it. A lot of people are asking, like, should I refinance debt right now? Should I refinance my mortgage? Like, why not? Yeah, I'd totally do it. And now's the time to refinance debt and keep payments low, just because there's so much uncertainty. Even when we come out of this, I mean, even if everyone opens up in 2 weeks, we all took a hit, and we have to rebuild things, and you got to ramp back up marketing and scheduling. And even if you open again, doesn't mean your patients are in a good spot. There's a lot of people laid off work, and people who are going to struggle getting back to work, and people who are now going to get put behind maybe years financially because of being out of work for a few weeks. And it's really tough. So the answer is, yeah, any way you can get your hands on money that you need, and especially lines of credit, that's a great way to do it. Again, if you don't need the money in your investment accounts, I don't sell that right now. Don't go do that right now. Do that as a last resort. But any other way, lines of credit, I think that's a great idea.
It's an interesting thing with people losing their jobs. They might not even have any dental insurance right now. So we're just kind of,
you don't know.
All of us are kind of winging it. I don't think anybody knows anything that's going on.
Well, and it's like you said, it's changing. Every hour there's a new announcement from a new state on what they're going to do with unemployment. That's been a topic. What do I do with my teams and unemployment? And every state's different. So you're just going to want to try to contact, I don't know what phone lines are like, but you're going to want to contact your individual state's unemployment office and resources to figure that out, because it's changing. I think I was just reading something about New York is going to be forgiving or going really easy on mortgages up to the next year for people who are in hardship, which is that's good, That's cool. Yeah. I mean, we got to keep people in their houses, and we got to get people back to work, and we got to pump money back into the big companies are okay. Clearly. I mean, if big companies get in trouble, our government gives them money.
Yep.
But your local gyms and bars and restaurants and boutiques and farmers markets, we got to get money back in their hands as soon as we possibly can. And, I'm looking forward to that, getting back to normal.
Yeah. And when we're done with this video, I will drop a chat that actually it's a link to unemployment for each individual state. So it'll actually go over
cool.
State. It has all of the information that you need to know, and I'll drop that in the comment section. So
that's awesome. That'd be helpful.
Yeah, since each state is different, it's really hard to say everybody it's this way. So
it's all unique.
Question so far, and it says, is there a risk that a brokerage firm could go bankrupt and we would lose the stock, mutual funds, etc., owned through that firm?
Yeah. So the question is, if you've got investment accounts at places like TD Ameritrade, Fidelity, Vanguard, Charles Schwab, can they go bankrupt and out of business? I mean, I anything in the world can happen. Anything can. And I think anytime someone goes on record as saying this is impossible, it can't happen, it could happen. The likelihood of an institution like any of those, Fidelity, Schwab, TD Ameritrade, going out of business and losing your money, people are referencing that because of what happened in 2008, where banks became their own investment shops. Basically, they were taking their own revenue and client money, and they were investing in mortgages and that kind of thing. That's a different scenario than a bank who just purely hold, TD Ameritrade, for example. They're just a holder of your money. They're not taking your actual investment money and doing something with it. It's your money. It's sitting there. But that, that is your investments can lose money. The mutual fund you're investment in can go down. That can go down. The stock, maybe you own stock in one company and that company goes out of business. Yeah, that's totally possible. TD Ameritrade, going out of business and then losing all your money, that's just not the likely scenario. That's not your biggest risk right now at all.
What do you feel like your biggest risk is?
Not having money to get through the next month. That's
Yeah.
probably people and health. I mean, we haven't even talked about that, but that's clearly like why all this stuff is happening is we don't know what's going to happen with public health and all the people, nurses and doctors and people working in hospitals exposed to this stuff on a daily basis. We don't know what the overload's going to be in our hospital system. I don't even think we're testing that much. I mean, I personally have friends who were like in places where people have confirmed the virus and they have all the symptoms and they can't even get tested.
Yep.
They can't even get tested. It's bonkers. And I think that's what everyone's waiting for is like, what's going to happen with health? And we all know old people. I'm an old person. We all know sick people. We all know people whose, immune systems are already compromised, and it's really scary. And I think that's what we're all holding our breath for. So that's the biggest. That's the biggest threat is like getting through this health and just paying bills for the next 2 months.
Yeah, pretty much. We don't have any comments right now, but feel free to keep filling those up. If you have them later and you're viewing this later, we'll definitely come back and look at this chat. But thank you so much, Ryan, for meeting with us. All your information was super helpful.
Yeah.
Do you have any last words?
Just, this is what everyone's saying now. Just stay safe, stay healthy, be okay. Protect your mental health too. Like now we're all just like sitting around at home, and for a lot of us, that's really weird. I'm an extrovert and I'm dying not having like public contact.
That's why we're doing this right now.
I know. I kind of want to like get a bunch of people in a parking lot in cars and then just like get everyone on the phone, like a big group chat, like, but face them in our cars, just so I can see people. So, like, I don't know if you got your family at home, like enjoy a little extra time together, go on a walk, do things you don't normally get to do in the middle of a workday. Yeah. And, protect your mental and emotional health a little bit. It's really stressful. I'm way stressed. I'm not like a person, but I'm really stressed about like just people's livelihoods right now, a lot of anxiety, but it's going to be okay. And it's going to be fine. I think the bright side to all this is what I'll say. I'm really inspired by some of the ingenuity and just some of the creative ways that people are coming up with to reach out and help others and entertain each other. Like I'm watching gyms now do live streams of all their workouts for people at home. You're watching people bring their 3D printers to hospitals in Italy to print out ventilator tubes.
Oh, that's cool.
I mean, you're just seeing people, you're seeing like the best of human nature come out and help each other and invent new things because we're forced to. And that's cool, and I think we'll come out of this better and more innovative and more prepared for the next time. And it'll happen. There will be a next time. In the next 10 years, there will be something else that we didn't see coming that will happen, and we'll do it all over again. And hopefully this makes us better for it. So Thanks for having me. Appreciate it.
Thanks for coming on. And I'm a firm believer that determined people working together can make anything happen. So we're better together as a team. Thanks so much, Ryan. So everybody, don't forget to follow Ultradent and then Dentist Advisors. And if you ever get a chance, listen to the Dentist Money podcast. Thank
you.